Welcome back to Investing Talk Podcast. Today, we're taking a close look at a company that's like pretty much a household name in global commerce, Alibaba Group Holding. Our mission for you today really is to unpack a critical question. Is Alibaba a good time to buy right now? We've gathered quite a bit of information of financial reports, analyst upgrades, market chatter to try and give you the full picture, help you navigate this complex landscape. Before we jump in, if you find these discussions helpful, please hit subscribe, maybe leave a like or a comment. It genuinely helps us bring more insights like this to you. And if you feel like it, consider buying us a coffee. It supports the work we do here. Oh, and one more thing. If there's a specific company you'd like us to look into, drop it in the comments below once we're done with today's topic. Okay, so let's set the stage a bit. Alibaba. Many of us probably use their services, maybe without even realizing it sometimes. But it's not just one thing, is it? It's this huge digital empire. And our sources kind of paint this picture of a company facing a real paradox. On paper, it looks, well, maybe deeply undervalued.
But it's constantly wrapped up in the unique risks of where it operates. So is this a massive buying opportunity just waiting for things to clear up? Or is it more like a value trap hidden by its sheer size? Let's start maybe by understanding the core business and how it's been doing financially. What are the main parts of this massive ecosystem? And how did the last fiscal year look?
Yeah, the scale is it's really something. For the fiscal year that ended March 31st, 2025, Alibaba Group reported total revenue of 870.7 billion RMB.
Okay, big number. What's that roughly in US dollars?
That's approximately 120.4 billion US dollars. And importantly, that represents a 7.2% increase year over year. So growth is there.
7.2% growth, okay.
But like you said, there are nuances. If you look at, say, the Alibaba International Digital Commerce Group, well, for the 6 months ending September 2024, they actually showed an adjusted EBITDA loss.
EBITDA loss, so earnings before interest, taxes, amortization, losing money there.
Right, about 6.6 billion RMB, or roughly 942 million US dollars in losses for that period. Now, this isn't necessarily, a disaster. It reflects ongoing strategic investments they're making.
Oh, okay. So they're spending money to make money potentially down the line.
Exactly. But it does mean you've got mixed profitability across different parts of the business. And the group's overall net income margin, well, it's felt the pressure. Increased competition, regulatory stuff, it all plays in.
Right. So the core takeaway is maybe they're sacrificing some profit now in certain areas, hoping those bets pay off later.
That seems to be the strategy. Calculated sacrifices in newer ventures, hoping they become the next growth engines.
Okay, so growth overall, but some units are investing heavily, impacting the immediate bottom line. That classic growth versus profitability tension. It makes strategic sense, I suppose, but how strong is their financial footing overall? Can they afford these bets? We're talking cash, debt, the big picture.
Well, looking broader, Alibaba actually maintains a really strong liquidity position. Very strong. As of March 31st, 2025, they reported cash equivalents, and short-term investments, totaling about 545 billion RMB.
Wow. And in US dollars?
Roughly 75.4 billion US dollars, just sitting there in cash and equivalents.
Okay, that's a serious cushion. What about the other side, debt?
Total debt stood at a pretty manageable 170.6 billion RMB, which is around 23.6 billion US dollars.
So way more cash than debt.
Significantly more.
Right.
And crucially, they've also kept up robust free cash flow.
Right, the cash they generate after paying for operations and investments.
Exactly. And that free cash flow is vital. It fuels their ongoing investments, and it supports their share buyback programs.
Ah, the buybacks. We'll come back to those. So overall, a very healthy balance sheet. Gives them flexibility.
Absolutely. Significant operational flexibility.
A true cash cow, then, in many ways. Buying back their own stock, too, which usually tells investors management thinks it's cheap. But, in such a dynamic market, especially operating primarily in China, a strong balance sheet isn't the whole story, is it? How well is that financial muscle translating into a really defensible competitive position? What's their moat look like these days? Who are they actually up against?
That's the critical question, isn't it? Their competitive moat, their ability to keep competitors at bay. Look, Alibaba is still a dominant force in Chinese e-commerce, no question. Plus, they have huge presences in cloud computing with Alibaba Cloud, logistics through Cainiao, and international commerce with platforms like AliExpress and Lazada. Their ecosystem, how it all connects, and just the sheer scale. It's formidable.
But I sense a but coming.
Yeah, that dominance is constantly being challenged. Domestically, competition is fierce. Think PDD Holdings with Pinduoduo.
Oh, yeah, they've come on strong.
Very strong. And JD.com, especially with their logistics, internationally, they're also battling global players. And then there's the elephant in the room, The ongoing regulatory constraints in China, those can change the rules of the game pretty fast.
So the moat is there. It's durable because of scale and integration, but it's definitely being tested.
Tested is a good word. Maybe even stressed.
Okay, stressed feels maybe more accurate given the headlines sometimes. So with that backdrop, strong finances, but a stressed moat, let's talk valuation. The stock was around $135, you said, late August 2025. When you look at the standard metrics, PE, PS, PB, what story do they tell? Is it cheap? Fairly priced?
Well, this is where it gets really interesting with that contrast. As of late August 2025, Alibaba's trailing 12-month PE ratio, that's price to earnings, right? How much you pay per dollar of earnings?
Yeah.
It was roughly 13.8 times.
13.8. How does that stack up?
Pretty low. Then you look at price to sales, PS, that was about 1.8x. And price to book, PB, roughly 1.4x.
Okay, 13.8 PE, 1.8 PS, 1.4 PB. Now compare that for us.
Right. So if you compare these ratios to global peers in e-commerce or even other Chinese tech giants, industry averages for PE are often more like 20 to 30 times. PS could be 2.2 to 4.0 times. PB may be around 3.0 times.
So Alibaba is trading at a pretty significant discount across the board compared to those averages.
Considerable discount, yes. And that discount largely reflects what the market is pricing in that persistent China regulatory risk, geopolitical concerns, growth worries. Call it the risk discount.
The risk discount. So on paper, it looks cheap, maybe very cheap compared to peers. But the big question for investors is always, is that discount justified? Is it a permanent China risk premium, making it a value trap? Or is there real mispricing here? Does this apparent undervaluation hold up if you use more complex models, like, say, a discounted cash flow analysis?
That's exactly the dilemma, right? When you look at independent DCF models, discounted cash flow, which try to estimate value based on future expected cash flows. They generally spit out a fair value for Alibaba somewhere in the $170 to $190 range per share.
$170 to $190. Compared to the $135 price, that suggests significant upside.
It does point to potential undervaluation from a purely fundamental perspective, but, and it's a big but, that underlying value is consistently held back by that risk discount we talked about, the uncertainty around regulations, competition in China. It just keeps the market cautious. So the numbers might say value, but the market sentiment says wait and see.
Right. Fundamentals point up, sentiment holds it down.
Yeah.
The classic standoff. Okay, so that's the fundamental value story versus market perception. Let's shift gears slightly. Beyond the long-term value, how has the stock actually behaved recently? What's the technical picture? Short-term price action, investor sentiment? What's that telling us?
Yeah, looking at the charts and market timing, Alibaba recently traded mostly in that $120 to $140 range. We did see increased volatility through August 2025, though. Things got a bit choppy.
Key levels, support and resistance.
Key technical levels to watch seem to be around $120 on the downside. That looks like a significant support level where buyers tend to step in. And on the upside, that $145 to $150 area seems to be acting as resistance, where sellers might emerge.
Okay, a defined range for now. What about moving averages or other indicators?
Well, the 50-day moving average is hovering around $126. The longer-term 200-day is near $117.
So the shorter-term average is above the longer-term one.
Yes, which technically suggests a modest uptrend might be starting to form. It's tentative, but it's there. Then you look at the RSI, the Relative Strength Index. It's near 58.
58, so not overbought, not oversold, sort of neutral leaning positive.
Exactly. Neutral to slightly bullish territory. Suggests there could be room to run if sentiment improves further. And another positive signal, the MACD, Moving Average Convergence Divergence, recently crossed positive. That generally confirms improving short-term momentum.
Okay, so the technical picture looks cautiously optimistic. Modest uptrend, momentum building, but still within that range.
That sums it up pretty well. Cautiously optimistic on the technical front.
Now let's connect that to recent news. What's been driving sentiment? You mentioned volatility in August. We heard about an AI chip announcement back in June, analyst upgrades. How much impact did those really have?
I think they were quite significant, actually. That preliminary development of a new AI chip in June. That wasn't just tech news. Strategically, it's about reducing reliance on U.S. suppliers, right? Given the whole tech tension situation.
A big strategic signal. And the analyst upgrades.
Yeah. Then in July and August, you had several big brokerages, Morgan Stanley, Goldman Sachs upgrading the stock to overweight. Their reasoning pointed to expected benefits from AI, plus maybe a stabilization in China's e-commerce market.
That's strong validation from major players. Must have helped sentiment.
Definitely boosted sentiment. You also had disclosures about their active share repurchase programs, which adds to the positive narrative.
Right, buying back stock signals confidence. But then we had the Q1 earnings report in August. That was a bit of a mixed bag, wasn't it? Revenue up, but earnings missed.
Exactly. That's where it gets really fascinating. Q1 fiscal revenues were actually up 2% year over year, came in at $34.6 billion, slightly above what analysts expected.
Okay, so revenue beat slightly.
But earnings per share missed expectations. They actually fell 10% compared to the previous year.
Ouch. Normally an earnings miss like that would hammer a stock, right?
You'd think so. But the market reaction was surprising. The Hong Kong listed shares actually surged over 19% after that report.
19% up after an earnings miss. How does that happen?
It seems the market chose to focus squarely on the positive narratives. The announcement of new AI products, real optimism bubbling up around the cloud business growth, Alibaba Cloud specifically.
So investors basically look past the short-term earnings miss and bet on the long-term potential of AI and cloud.
That appears to be exactly what happened. They saw these as key strategic moves for the future. And following that, you had UBS and other big banks actually raising their price targets. UBS went up to $162.
Wow. So the market narrative shifted quite dramatically there, despite the mixed numbers. What about other signals? Like, what are insiders doing? Are executives buying or selling? And what's the buzz on social media, the general mood?
Good question. Insider activity in 2025 showed, well, limited executive buying.
Limited buying, not selling, though.
Not wholesale exits, no. So it reflects maybe some caution, but not panic from leadership and social media sentiment. It definitely improved after those earnings. You saw more positive chatter around AI and cloud. But it's still mixed overall. People are excited about the tech, but those broader macro worries and the regulatory overhang, they haven't gone away.
Okay, so improving sentiment, but still cautious, a recurring theme here. All right, we've covered the business, the finances, the valuation puzzle, recent momentum, news. Now, looking ahead, what are the potential triggers, the catalysts that could really move the needle for Alibaba stock, short-term and long-term?
Yeah, looking forward, there are definitely things to watch. Short term, the big one is the next quarterly earnings report, Q2 FY 2026, expected early November 2025.
That'll give us an update on profitability of those investments.
Exactly. Then you've got Singles Day on November 11th, always a huge barometer for Chinese consumer spending and Alibaba's platform strength.
Right, Singles Day, massive event.
We're also watching for more clarity on the restructuring of Cainiao, the logistics arm. A potential spin-off there could unlock value. And just in the next 3 months or so, keep an eye on potential ETF rebalancing around September 20th. China National Day holiday e-commerce reports around October 2nd, more institutional holdings filings due mid-November. These could all impact liquidity, trading volumes.
Okay, plenty of short-term events. What about longer-term catalysts?
Longer term, the number one thing is still clarity on China's tech regulations. Any sign of a more stable, predictable environment would be huge. Progress in international expansion is key too, especially in Southeast Asia and Europe. Can they make those investments pay off? And then potential M&A or strategic partnerships, particularly in cloud or logistics, could be significant drivers down the road.
That's a lot of potential upside triggers. But let's flip the coin. We know the risks are there. Can you summarize the key ones investors really need to keep front of mind?
Absolutely. The risks are substantial. You can't downplay them. Stock specific. The biggest is still that regulatory uncertainty from Beijing. Policy changes can come suddenly, impact operations, data requirements. It's unpredictable.
The sword of Damocles, always hanging there.
Pretty much. Then there are internal things, management structure, succession planning within that Alibaba partnership system. It's complex. And the rising costs from those big investments, especially internationally, where returns haven't always been stellar, that puts pressure on margins.
Okay, those are company-specific. What about broader market risks?
Big picture risks. A global economic slowdown, particularly if China's economy weakens further, would hit consumer spending hard. The ongoing U.S.-China tensions are a constant worry impacting supply chains, potentially Alibaba's U.S. listing status, the ADRs, and just general investor fear.
Right, the geopolitical risk.
And of course, intensifying competition, PDD, JD, others. They aren't standing still. It's a battle across e-commerce, cloud, everywhere. Oh, and don't forget the rumor mill. Markets are always buzzing with speculation. U.S.-China trade talks, AI deals, special dividends, leadership changes. These can cause short-term volatility, even if unconfirmed.
That's a sobering list. Regulatory overhang, competition, macro slowdown,
Yeah.
geopolitics, a lot to weigh. Okay, here's where we bring it all together. We've got the strong fundamentals, the cash pile, the ecosystem. We've got that valuation discount that looks so tempting on paper. We've seen some positive technical signs and recent momentum, especially around AI and cloud. But then we have these very real, very significant risks constantly looming. So how do we synthesize all of this? What's the investment thesis for Alibaba right now? What's the overall picture for our listener?
Yeah, putting it all together, if we had to put a number on it, our analysis suggests maybe an overall rating of 7 out of 10 right now.
7 out of 10. Okay, why?
The rationale is this. Fundamentally, Alibaba does look undervalued compared to global peers. It has strong cash flow, massive cash reserves, durable core businesses. You can't ignore those strengths.
What's the negatives?
But those positives are significantly counterbalanced by the persistent regulatory risk, the management complexities, and that fierce competition. These things constrain both how much profit they can realistically grow and, crucially, how confident investors feel. So while the near-term price action looks a bit more promising, thanks to technicals and the AI buzz, long-term success really hinges on getting regulatory clarity and proving they can execute successfully in these newer growth areas like AI and international commerce.
So a 7 out of 10 reflects that balanced, strong fundamentals held back by significant, hard-to-quantify risks. Now let's make it really practical for our listeners. What does this mean for you, the individual investor, considering this stock? Is this something for short-term gains, chasing that momentum? Or is it strictly a longer-term play requiring patience and tolerance for risk?
I think connecting this to an investor's approach, Alibaba probably offers a better risk-reward profile for long-term investors. Specifically, those who understand and are genuinely willing to accept the inherent China-specific risks and the likelihood of continued short-term volatility.
So if you have that risk tolerance and a long horizon,
Then the current discount could be an attractive entry point, assuming you believe the long-term growth story eventually wins out over the short-term noise.
and for short-term traders.
For short-term traders, sure, there might be opportunities around specific events, earnings, singles day, news flow, but they absolutely need to anticipate continued high volatility. It requires active management, watching those technical levels, being nimble. This is definitely not a set it and forget it stock in the current environment. It demands attention.
Vigilance is key, it sounds like, whether you're long-term or short-term. What a comprehensive exploration of Alibaba Group Holding. We've really tried to peel back the layers today. A company with just immense scale, huge potential, trading at that persistent discount, but navigating this incredibly complex web of competition, strategic pivots, and regulatory shadows. So here's a final thought for you to chew on. As Alibaba makes this big strategic push into AI and ramps up international expansion, what does that mean for its fundamental identity? Is it still primarily a Chinese e-commerce giant? Or is it morphing into something else entirely? And how will that evolution play out against the backdrop of global politics and domestic regulation? Something to really ponder. Thank you so much for joining us for this discussion today. We hope it's given you some valuable insights for your own thinking. Until next time.